Welcome back to the Cafe Fund Flick series part 2. Today, we are elaborating on the net income, earnings per share, EPS, and the legendary ratio called PE ratio, developed by Warren Buffett's teacher himself, Benjamin Graham. Remember this funnel we had? Revenue, cost of goods sold, COGS, gross profit, operating expenses, OPEX, operating profit. Today, we're going to talk about the net income, which is at the bottom of this funnel. Net income represents the profit your cafe makes after every single expense is paid off. Supposedly, Cafe Fund Flicks earns $100,000 a year from selling coffees and pastries. After deducting all the expenses like rent, salaries, cost of ingredients, etc., let's say you are left with $20,000. This $20,000 is the net income of Beanstalk for that year. How about earnings per share? What is its relationship with the net income? Now, suppose you have 10 shares of Fund Flicks Cafe that you've distributed among investors. The earnings per share, EPS, is simply the portion of net income allocated to each share of stock. So in this case, the EPS would be the net income, $20,000, divided by the total number of shares, 10, which equals $2,000 per share. Investors often look at the price to earnings, PE ratio, to gauge the relative value of the cafe's shares. It's calculated by taking the market price per share, which is what you see publicly on the price of each company found on Google Finances. You then divide the market price per share by the earnings per share, EPS. Suppose each share of Fund Flicks Cafe is currently selling for $10,000 on the stock market. The price-to-earning ratio would then be 5. This is derived by dividing $10,000, market price per share, by $2,000, EPS. This ratio indicates how much investors are willing to pay for each dollar of earnings generated by Cafe Fund Flicks. A higher PE ratio could suggest that investors have high expectations for the cafe's future earnings growth, while a lower PE ratio might indicate a less optimistic outlook. We often evaluate PE ratio to see if a stock is expensive, but there is no free lunch in Cafe Fund Flicks or the world, just as a superficial analysis of PE ratio will not suffice in the investing world.